From 1st of July 2025, there have been some changes to age pension rates and the thresholds for the assets and income tests. In this video, we'll cover what has changed and the rates and thresholds going forward. Let's first touch on the eligibility for the age pension, which comes down to three key factors: age requirements, residency requirements, and means testing. The minimum age to qualify for the age pension is 67. To get age pension, you generally need to have been an Australian resident for at least 10 years in total. For at least 5 of these years, there must be no break in your residence. Once you meet the age and residence requirements, how much age pension you can get is determined by the assets test and the income test. These two tests work independently, each producing an outcome. The test that results in the lower pension amount will determine your payment. The full age pension rates don't change on 1st of July 2025, but they are only indexed twice a year, on 20th of March and 20th of September. So if you're already receiving the full age pension, there won't be any pay rise this July. But if you're on a par pension or just miss out because you are over the income or assets limit, don't tune out. Just because the full rate isn't increasing doesn't mean your payment won't. The income and assets test thresholds are going up, which could work in your favor. Before we dive into those changes, let's quickly recap the current full age pension rates, which will stay in place until 19th of September 2025. For single, the full pension amount is $1,149 per fortnight. And for couple, it is $866.10 per fortnight per person. These figures include the basic rate, pension supplement, and energy supplement. They translate to an annual income of $29,874 for a single and $22,518.60 for each member of the couple. If you're eligible for even $1 of age pension, you will automatically get a pensioner concession card, which gives you access to a range of valuable discounts and benefits. On top of that, there is rent assistance received by eligible pensioners who rent privately. The amount depends on how much rent is paid and whether you are single or part of a couple. Same as the age pension, the maximum rent assistance rates don't change this July. They're only indexed on 20th of March and 20th of September each year. When it comes to the financial thresholds for the assets test, both the lower and upper limits increase on 1st of July 2025. Both thresholds receive the same increase, but the size of that increase varies across pensioners with different family situations. This means from 1st of July 2025 to 19th of September 2025, for homeowners, the assets test threshold is $321,500 for singles and $481,500 for couples combined. For non-homeowners, the assets test threshold is higher, $579,500 for singles and $739,500 for couples combined. If your assets are below these thresholds, you will receive the full age pension. For singles, for every $1,000 over the threshold, your pension reduces by $3 per fortnight. For couples, for every $1,000 over the threshold, the pension of each member of the couple reduces by $1.50 per fortnight. Once your assets reach the upper threshold, also known as the cutoff limit, you won't receive any pension. It's important to know that if you're a homeowner, your principal residence is not included in the accessible assets. If you are a non-homeowner, you can have more accessible assets until your age pension is cut off. Now let's move on to the financial thresholds for the income test. Both the lower and upper limits increase on 1st of July 2025 by $6 per fortnight for singles and $8 per fortnight for couples combined. If you are a single, you can earn up to $218 per fortnight before your age pension is reduced. For every dollar you earn over that amount, your pension goes down by 50 cents. Once you earn $2,516 per fortnight, your age pension stops. If you are a member of a couple, you can earn up to $380 per fortnight combined before your age pension is reduced. For every dollar you earn over that amount, the pension of each member of the couple goes down by 25 cents. Once your combined income reaches $3,844.40 per fortnight, your pension stops. Under the income test, deeming is an important concept. Essentially, it means your financial assets, including bank accounts, shares, or superannuation, are deemed to earn a set percentage of income, regardless of their actual returns or the payments you receive from them. These percentages are determined by the deeming rate. From 1st of July 2025 to 30th of June 2026, financial assets are deemed to earn 0.25% on the first $64,200 for singles or $106,200 for couples combined, 2.25% on any amount above these thresholds. The deeming rate of 0.25% and 2.25% remain unchanged from last financial year, but the threshold that divides financial assets into lower and higher deeming brackets has increased by $1,600 for singles and $2,400 for couples compared to last year. This means more of your financial assets are assessed at the lower 0.25% rate before the higher deeming rate kicks in. This lowers your deemed income, which in turn reduces the income counted under the pension income test. That can translate to a higher pension payment if you are income tested. Another important thing to know under the income test is work bonus. Some age pensioner might still work and earn income from gainful employment or self-employment. The work bonus allows you to earn up to $300 per fortnight from employment without it affecting your age pension. During periods of low or no employment, the unused portion of the $300 fortnightly exemption accumulates in your work bonus balance, up to a maximum of $11,800, creating a buffer for future earnings. Additionally, depending on when you submit your claim, you might get a one-off boost of $4,000 to your work bonus balance. This credit, combined with the standard $300 fortnightly exemption, allows pensioners to earn up to $11,800 before their pension payments are affected. You can monitor your work bonus balance through your Centrelink online account. It's important to know that income from investments, rental properties, or passive business activities does not qualify for the work bonus. There is no need to apply for work bonus. Eligible pensioners have the work bonus automatically applied to their income assessments. The increased lower thresholds for the income and assets test mean those who experience a small reduction in their pension rate previously will now get the full age pension. The increased upper thresholds for the assets and income test mean that some people who just missed out before might now qualify for a small age pension. And that means access to the pensioner concession card. It can save you thousands if you make the most of it. So even if the pension payment itself isn't a big deal to you, the card itself is worth having. And for anyone in between, you're likely to see a small boost in your age pension. If you are asset tested, which means your age pension rate is determined by the value of your assets rather than your income, all else being equal, the increase will look something like this. If you are income tested, which means your age pension rate is determined by your income rather than the value of your assets, all else being equal, the increase will look something like this. Oh yeah, if you want this rate on a single page or Excel spreadsheet, click the link in the description box down below. Now that you know the latest rates and thresholds, check out this video to discover many ways to maximize your age pension. Thanks for watching, I'll see you over there.